Vici Properties stock, ticker symbol VICI. This stock is trading sideways on the year-to-date chart, while the overall market, in this case the S&P 500, is up almost 10%, so that's a big difference. On the 1st of May, VICI presented quarter results where they missed on FFO but beat on revenue. From a dividend point of view, things look pretty interesting with dividend yield at almost 5% and 4 years of dividend increases. But does this mean that VICI stock is a buy at current prices? Well, in this video I'm going to show you real quickly what VICI does, the most recent earnings report, the fundamental analysis, dividends, and in the last part I'm giving you my price target to see if they are a buy or not. And I think you definitely want to see that part, so make sure to watch until the end. And I'm also very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. So, what does VICI do? VICI Properties portfolio consists of 49 gaming facilities across the United States and Canada, comprising approximately 124 million square feet and features approximately 60,000 hotel rooms and more than 450 restaurants, bars, nightclubs and sportbooks. If we dive in the most recent earnings report, we see a few interesting things. Total revenue increased 110% year over year, which is of course a lot. But keep in mind that it also is impacted by the lockdown periods last year. The same story with the net income. This increased 115%, but don't get me wrong here. These are great numbers of course. AFFO, one of the most important numbers, increased 73% to 0.43 per share. This easily covers the dividend of 39 cents, resulting in a payout ratio of 74%, which is around the average for REITs. And in here we see the tenant breakdown. VICI has a niche industry with the Vegas Strip as their main focus. Caesars being the biggest tenant, representing 40% of the annual cash rent. The WALT or weighted average lease term is looking really good at all the tenants. But to me there's not enough diversification, with Caesars and MGM representing 76% of the annual cash rent. So that's something that I don't like. Other than that, this looks pretty good. Right now Las Vegas represents almost 47% of the total revenue, while the other 52% is coming from other states. And yeah, that is what VICI is known for, the Vegas Strip. VICI has raised its 100% cash dividend every year as they stated themselves and focus on a 75% payout ratio, which is the average for REITs, as I said earlier in this video. Growth in dividend is slowing down a tiny bit recently, but 8.3% is still a great number. Credit ratings don't look that great, to be honest. I prefer A ratings, to be honest. Total leverage ratio does look good at 6 to me. And now that we know more about the company, it's time to check the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to subscribe to my channel to receive multiple analyses every week. And also join my Discord channel for free to meet other people within the community and to talk about stocks. It's completely free, so don't miss it out. Let's continue diving into the fundamentals. VICI is a 31 billion market cap company. PE ratio isn't a fair metric to use with REITs, so I will be using the price to FFO instead. Right now it's sitting at 22, which is a bit on the high side, to be honest, and could be indicating that VICI is overvalued. Later in this video I will show you my 3 price targets for VICI, so make sure to watch until the end, because price to FFO is only telling a small part of the full story here. Revenue is at 3 billion, and in this graph we see that revenue went up pretty decent in the past couple of years. Over a longer period of time margins are going up and down, which is something that I don't like of course. I prefer a steady margin. Since 2021 margins have decreased quite a bit, and most recently it started to increase again. We see interesting things happening at the analysis estimations. In 2023 it's expected to grow quite a bit in revenue and EPS according to these analyses. But after 2023 growth starts to slow down to mid-single digits. Return on assets is sitting at 2%, which is below my 10% minimum. Return on equity also doesn't look that great at only 6.3%. And the most important number, return on invested capital, is sitting at 3.2%, which is also not the highest, of course. Another thing that I don't like is the fact that it's lower than the 5-year average. Current ratio is at 1.81, which is a pretty decent number for a REIT. And total debt is sitting at 17.4 billion, and I prefer companies that can pay down at least a third of the total debt with the total cash position. Right now, total cash is sitting at 247 million, so they can't pay down a big chunk of their total debt, which is something that I don't like. But since this is a REIT, it doesn't worry me that much. But it's still very important that free cash flow is growing, since this is used to pay down debt of course, but also to buy back shares, pay dividends and a lot of things. And in here we see that free cash flow is going up over a longer period of time, so this looks pretty good to me. Another thing that is very interesting about this company are the shares outstanding. It's going up big time in the long run. Usually I don't like to see this, but for a REIT it's different. They issue new shares to raise capital and grow the business. Next up are the dividends. Dividend yield is sitting at 4.94%, which is a great number of course. Annual payout is at $1.56 and payout ratio is at 75% as we saw earlier in this video, and not the 106% displayed here. The average for REITs is around 75%, so it's pretty good. There is no 5-year dividend compound annual growth rate since they increased the dividends for only 4 years now. Overall, these dividends look pretty good to me, but does this mean that VICI stock is a buy? Well, let's check the 3 price targets that I created using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets, starting off with the revenue growth. For the revenue growth I'm filling in 6%, 8% and 10%, since I think they will increase their revenue at the same numbers versus the historical averages. Next to that, it's also based on the analysis expectations and the current outlook. Profit margin I'm filling in 42, 45 and 48%, and for the free cash flow margin I'm filling in 44, 48 and 52%. For the PE ratio I'm filling in 20, and for the price to free cash flow I'm filling in 18, 19 and 20. My desired annual return is 15%, since I can get an easy 10% average annual return with owning an ETF. Usually I take 12.5%, but with this company I want to build in a higher margin of safety since it is a REIT. Right now VICI stock is at $31. I hit analyze and we see only one green number. And since this is a REIT, I will focus only on the discounted cash flow value and not the multiple earnings of value. We have a low price target of $19, a mid price target of $25 and a high price target of $32. To me, the mid price target is the most justified here, indicating that they are overvalued based on these numbers. My final conclusion on this company is that I do like the niche industry they are focusing on. They have a big moat in that industry, but there's not a lot diversification when it comes down to tenants. I do like the potential of diversifying to other states or maybe even other countries, so it's pretty good to see that they invest in that as well. I don't like the current credit ratings, and revenue probably will slow down in the coming years. From a value point of view, I don't think VICI is an interesting stock right now, with my price target at $25. But from a dividend point of view, things look pretty interesting. For now, I'm skipping this stock, but I will keep analyzing them from time to time, since I get a lot of requests for this stock, and of course, it's an interesting company. And remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.